Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock, with news about the latest and pre-election Aussie budget delivered overnight. But first, the American retail Redbook Index rose 6.3% last week from the same week a year ago, suggesting buoyant trading in physical stores, gains well ahead of inflation. It is not only the strongest gain of 2024, you need to remember that it is on the back of a rising 2023, which itself was rising strongly in 2022. Meanwhile, US factory prices rose more than expected in April, up 2.4% from the same month in 2023. This is about average over the 15-year history of this data, excepting the pandemic distortions, of course. But if there is a cloud, it is that the month-on-month rise seems slightly elevated. And US Fed boss was speaking overnight in the Netherlands, but he had the same message again, that inflation is stickier than the central bank wants to see, and that rate cuts from here are way off. But he also repeated that it is very unlikely that the next move will be a rate hike. In China, there's some signs of elements of stress that are spreading to insurers now. Several insurance companies have chosen to pay higher interest rates, sharply higher interest rates, on their capital bonds rather than exercise an option to redeem them early, a sign that they're facing solvency problems. But today is all about the Australian budget delivered overnight. With the Australian economy its weakest it's been in 23 years, their Treasurer has handed down his third federal budget, delivering its second consecutive surplus and setting the government's agenda as they head into an election cycle. That election is due in May 2025, so this budget has to be seen as the last major policy setting before then that could deliver results before polling. The surplus announced of $9.3 billion this year is off the back of generous company tax receipts, a pleasant surprise after the $1.1 billion deficit forecast in the mid-year economic and fiscal outlook in December. However, this will swing into a deficit of $28 billion in 24-25, 1.4% of GDP, with larger deficits in the years following than previously forecasted. The US Treasury 10-year yield is now at 4.45% and down 4 basis points from yesterday, but the price of gold will start today back up $20 at $2,355 an ounce. And oil prices have fallen $1, just on $77.50 a barrel in the US, while the international Brent price is $82 a barrel. And the Kiwi dollar starts today marginally firmer than yesterday at just over 60.3 US cents. Against the Aussie, we're a tad firmer too at 91.2 Australian cents. Against the euro, with little change to 55.8 euro cents. That all means our trade-weighted index starts today at just on 69.6 and up 10 basis points from yesterday, partly on a weaker yen. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.